have found with platinum specifically, so that's what I've been trading mostly this year, platinum and crude oil. So I've narrowed it down to 2 instruments. Platinum, you get 7 touch points, 5 touch points on a regular basis.
Oh, wow.
It truly respects 4-hour time frame.
Interesting. Okay.
It is incredibly respectful to trend lines. Where crude oil, you get 2 touch points and you get a fake out. You get 3 touch points, you get a fake out, or you get 2 touch points, then you've got the actual trend reversal. But I would say I don't have enough data for the 4-hour time frame to be like, because I've only placed less than 20 trades this year, to be like, okay, out of the 5 touch point trades, 5 touch point trend line breaks versus the 2 or the 3, which one is the best? I don't think I have enough data, but from my lower time frames that I used to trade on the 1 hour, the 5 minute, the 3 touch point break just seemed to be like that golden zone.
The third one. I wanted to follow on with that. Let's say you found one that was, let's say the third, for example, is a, let's say, more probable one. And there's the less probable ones, let's say a second or a fourth, just to put an example. Would you still trade them equally if you had these additional confluences that you mentioned? Meaning to say the touch of the trend line is a point, but it's not enough. It's the additional things. What are those additional things that takes you from a zone of interest to I'm getting in?
It's going to be, so I've taken this year a lot of 2 touch point breaks. But they also met all the criteria. And there's also a level of intuition that comes into play. Like if I get the break of a 2 touch point trend line, no, that's not A+, but maybe platinum, all year has been above this level, and it's just, it seems as though, I'm saying, it may not sound very articulate or educated, but it seems as though the price of platinum wants to gravitate, above this level. So maybe I get a break of a downward trend line that only has 2 touch points, and I'm still more inclined to take it because maybe I have a long bias this year. So there's going to be times where I do take the 2 touch point break, but if I've got double confirmation, if it's also crossed, support and resistance, if it's been, maybe it's only got 2 touch points, but it's been trending in this direction for 2 weeks, I'd still be inclined to take that. So I want more confidence and confirmation and maybe just like a 2 touch point break versus if it's a 3 or even more, I don't need the additional confirmation. Like that's the confirmation.
And the confirmations that you do have, are they like rejection patterns, a head and shoulder and so forth, or is it candlestick patterns? What kind of thing takes you from a zone to an entry?
So I am not educated in the patterns, so I'm not sure what I know what a head and shoulders is just because it's all over social media.
Yes.
But yeah. The candlestick patterns, I don't know what they are. It is purely just how much time is behind the trend line, how many touch points. I'm using the wicks of the candles. So I guess answer is that I don't use the patterns.
Fair enough. And do you that when you have a high time frame trend line like a 4-hour, and then this is the next zone I'm interested in to sell, would you then go and see additional trend lines and lower time frames to support like trend lines on top of trend lines? Is that
so I don't go lower in time frame to look for an entry. I will always go higher though. So that's where I found myself getting messy over trading, is when I did try to look for confirmations in lower time frames and then go back to the 4-hour, it was getting messy. So when I found I could stay in the 4-hour time frame, that's as low as I'm going. But if I need additional confirmation in the daily, in the weekly, in the monthly, just looking overall trends, that's where I'll draw my trend lines. So when I'm trading something new, I will do the top-down analysis. I'll do monthly, weekly, daily, then stay in the 4-hour. So there will be additional trend lines drawn in different time frames, but never lower than the 4-hour.
Interesting. When you are trading a 4-hour and above time frame, and usually because trend lines are not exact science, therefore you have a reasonable stop loss to give yourself breathing room and a buffer against previous zones. As a result of that, there's 2 things that come to mind. Number one is you're going to have a long time for the trade to play out, because it's 4-hour price action. So for you to, let's say, make that new lower low, it could be a couple of days, weeks, and maybe even beyond.
Right.
That's number one thought that comes to mind. Number 2 that comes to mind is your risk reward will be, I imagine, 1 to 2, 1 to 3 in that region.
I don't trade risk to reward. So
interesting. Okay.
So when I'm in this trend reversal, I don't know how long it's going to turn in this new direction for. So that's been the kind of unconventional part of my strategy, is that I know my risk. I know my initial risk, but the reward, I'm just trying to stay in this trend for as long as possible. So the entry is based on the break of a trend line, but so is the exit. So once we have crossed the trend line, that it is the new trend it's following along, that's when I know it's time to either take my profit or loss.
I got a lot of questions then.